Hi all, it's 1st October 2021 today. I'm going to touch on Chinese equities markets weekly review. Evergrande misses second payment and bond yields spiking up for real. Before I proceed, appreciate a like if you like this video and do subscribe to my YouTube channel as I update this channel very frequently with the stock analysis and broad market reviews. Thank you. Here's a recap of what I did on 30 September. Seng Index was relatively weak yesterday, started off the day weak, and I mentioned that the foreign financial medias are likely to continue to flood the market with negative news about the market, Evergrande misses payment, and potential regulations. On one hand, BlackRock and Bridgewaters are positive about the Chinese markets in the long term, whereas George Soros and his gangs are likely to continue to sound the alarm bell and say, well, it's time to be cautious and the bottom is not really the bottom. And likely the short sellers is potentially trying to push the points down by now 1 to 2 leg down. Today is the China's National Day. Will today speech or any particular news release mark the bottom of the Hang Seng market as well as the Hang Seng Tech, or will it trigger another series of concerns over what has been said? For Hang Seng Tech, it's important that Hang Seng Tech had to find support at 6,100. If it's not, it may potentially test another leg down to 5,400. But like what each of us has, we have different equity exposure as a percentage of our portfolio, and the best way to play this tactical allocation is certain position of the portfolio to be relatively agile to reflect the market conditions, and the other part to be taking a longer duration bet. For me, like my audience who have known that right now I'm taking only small bites because of my current equities position. So what's the futures movement for the US market at 10:27 a.m.? Well, it's all down around 0.5%, 0.6% for Dow, and S&P futures are down 0.5%, and Nasdaq 100 is down around 0.45%. Audience will watch my video on the US broad market review will know that I have different price support for Nasdaq 100, S&P, and Dow. And right now, we are at around the second and third support level. So it's important to see, with China having another long 1 week holiday next week, will the short sellers take the opportunity to attack the US futures right now, at the same time to attack Hong Kong market next week on Monday, Tuesday, which we are seeing during the recent 中秋节 holiday in late part of September, when we see Hang Seng break 25,000 points fiercely and went down to as low as 23,770 points. Hang Seng Tech, like what I mentioned, had to hold 6,100 points, and in fact on Thursday yesterday it tested as low as 6,035 only to close up 6,100. The point right here is that the volume is still relatively lower compared to the usual day when I see like turnover of over 50 billion, but these few days is shrinking in terms of volume and it's on the down day. It's concerning, and it plays to be more cautious. Like what I say, given for my current positions and parties who already have Chinese exposure, it's wise to take smaller bites rather than to go all in. I still have cash on the sideline as my portfolio strategy, so that if it goes another 1 or 2 leg down, even for the US markets, for US equities, I may pick up more shares, but not at this stage where I'm going to buy big positions. Alibaba continued to show weakness despite the PBOC injecting many days of liquidity into the system. But like what I said in the past, PBOC is the more prudent central bank compared to the rest of central banks like Federal Reserve, Bank of Japan, etc. And they are not likely to do significant asset purchases to spoil and to support the markets. They will be prudent and cautious, and that's a good move for the financial system in the long term. And Xiaomi was a bit disappointing. It's trying to hold on to the Wednesday gain, but it did not. It came down to 21.35, and Xiaomi in itself had to hold around this price level. If not, you may see a stronger support level at 20 Hong Kong dollar. And Kuaishou was down for the 2 days, and it had to hold 80 Hong Kong dollar. And back to my Hang Seng Tech index point, 6,100 had to hold. So all these points are at critical support level right now, and if they don't hold, it's another leg down. For Alibaba, like what I say, because of antitrust measures, and it had led the decline ahead of other Chinese equity, way ahead since last year November 2020, and it's likely that its weakness is to extend because it's where the trouble is coming from, right? Isn't it? Now is a make or break time, so think carefully and act carefully. Global financial news, we are like Biden signing bills to avert government shutdowns, no House vote on infrastructure bills, and Evergrande misses the bond payment, and inflation fears. A lot of negative narrative to weigh down the market. Hang Seng Spot, here we are at 24,575 despite gap down yesterday, which sees it as low as 2,400 and 24,300 points. And at the end of the day, it did not drop so much. It dropped only 0.36%. There's still buyers in the market, and we've been comfortable taking positions into the weekend. So what will happen? I mean, hopefully the short sellers will not be successful in putting the market down on Monday, Tuesday, like what they have done during the recent 中秋节 festival. So, but if they really succeed, then we might have to see the support level at 23,700 to see whether it can hold. If not, there will be another leg down. But I'm a cautious bull. I still will choose strong company with good business and growth. Shanghai Index, Shenzhen Index, and Chinex all went up, and all these are above the support levels. So we have to see if the support level cannot be held, it's naturally only be right to be more cautious. So all in all, I think that it's important to be more cautious now for people with very high position, take small bites like me, and for people who do not have any equity exposure, it's a good time to build a watch list and find and allocate equity into strong companies with good growth rate when the discount present. Okay, thank you. As always, this should not be construed as any investment or trading advice because this reflect my observation of financial markets at any time when market conditions change. My view will be updated as well. And this is how I allocate my equities for trading positions, and for longer duration bet, I really look at companies with good business model, good growth rate, and solid balance sheet. Thank you. Do subscribe to my channel for more frequent updates on the various video releases. Thank you.